Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 24th, 2024, and we're diving into Canadian Pacific Kansas City's third quarter earnings report. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss CPKC's performance, especially given their recent strategic initiatives and the integration of Kansas City Southern.
Let's start with a brief overview of CPKC. They are a transcontinental freight railway linking Canada, the US, and Mexico, and they just released their Q3 2024 earnings. What are the highlights?
CPKC reported revenues of $3.5 billion, a 6% increase from last year, and a diluted EPS of 90 cents. Their core-adjusted combined diluted EPS was 99 cents, reflecting strong operational execution despite some headwinds.
Revenue and profitability overview. Let's delve into the revenue and profitability figures. CPKC reported a revenue of $3.5 billion, up 6% from the previous year. John, what factors contributed to this growth?
The revenue growth was driven by increased volumes and improved pricing across several commodities. Notably, energy, chemicals, and plastics saw an 11% increase, and automotive revenues surged by 25%. This indicates strong demand and effective pricing strategies.
And what about their profitability? The EPS increased to 90, with a core adjusted EPS of 99. How did they achieve this?
CPKC's profitability was bolstered by operational efficiencies and cost management. Despite a slight increase in the operating ratio to 66.1%, they managed to expand their core-adjusted operating ratio to 62.9%, showcasing their ability to optimize operations and manage costs effectively.
Operational efficiencies and future outlook. Moving on to operational efficiencies, CPKC's operating ratio increased slightly to 66.1%. However, their core-adjusted operating ratio was 62.9%. What does this tell us about their operational performance?
This indicates that while there were some cost pressures, CPKC has been successful in implementing efficiencies. The core-adjusted operating ratio reflects their underlying operational strength, excluding acquisition-related costs and other significant items.
Looking ahead, CPKC expects revenue ton miles to grow in the mid-single digits and core-adjusted EPS to grow double digits. How realistic are these projections?
Given their strategic initiatives and investments, these projections are quite realistic. The integration of Kansas City Southern is expected to unlock further synergies and growth opportunities, positioning CPKC well for the remainder of 2024 and beyond.
Strategic initiatives and risks. Let's discuss CPKC's strategic initiatives. The integration of Kansas City Southern is a significant move. How is this progressing?
The integration is progressing well, with CPKC focusing on realizing synergies and enhancing their network capabilities. This strategic move is expected to provide unparalleled access across North America, boosting their competitive edge.
What are the potential risks that CPKC faces in achieving their strategic goals?
Key risks include economic conditions, competitive pressures from other rail carriers and transportation modes, and regulatory changes. However, CPKC's strategic investments and focus on operational excellence should help mitigate these risks.
Key takeaways. Finally, let's touch on the insights from CPKC's leadership. CEO Keith Creel mentioned strong performance and a positive outlook. What are your thoughts on this?
CEO Keith Creel's confidence is backed by CPKC's solid execution and strategic positioning. The company's focus on safety, customer service, and operational excellence is generating value for stakeholders, and they are well positioned for future growth.
In summary, how would you assess CPKC's investment potential?
CPKC presents a compelling investment opportunity, especially for those looking for exposure to the North American rail sector. Their strategic initiatives and strong operational foundation suggest long-term value creation for shareholders.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on CPKC's performance in the comments below.